All right, good morning, good afternoon, wherever you may be. It's time for Trading Coaches Playbook, and this is Ryan Litchfield, and I am thrilled that you're here. Please acknowledge. Trip says, "Hey, Coach, how are you?" So at least somebody's hearing me out there. Everybody, I am thrilled to be here, but I got to tell you, I am back from being gone for a couple of weeks. And every time that I leave the Seattle area, which I love, I've been here for decades. In the wintertime, every time I leave and go someplace nice, it gets harder to come back. It really does. I got to tell you, my wife and I are kind of looking forward to kind of a next thing in our life when we will probably be building a home down in California close to my daughter. And I got to tell you, I've been in the Pacific Northwest as my residence for, golly, since 1967. Long time. And it will be hard to leave. And yet, like I say, I'm getting kind of weaned away from it. And it's beautiful, but the winters, the gray is just getting to me, man. The gray and the gloom and the drizzle, it just wears on me. And when in October and November it starts to wear on me, that's before it even hits. I'm starting to get the aversion of anticipation, and can't wait to plan a trip to Mexico or someplace. Anyway, I'm glad I'm back. And I'm glad to be here with you guys this morning. Can you see? You should be seeing the Trading Coaches Playbook slide up there, beginning slide with my name on it. And if I change the slide to the next one right here, you see the change to the disclaimer. Just want to make sure you're seeing what I'm seeing. Yep. Okay, perfect. All right, so the disclaimer, as we do with every single class, we remind you that we are not going to be giving you specific advice on any trading positions. We will talk about trading concepts and training principles related to different aspects of trading, but we're not giving specific advice on any particular trade. And you all should know that, but it is something that we have to remind ourselves of always. So with that in mind, we'll go to our calendar. And every time I give props to my buddy Rob for the incredible content and effort that it takes to put content in front of you guys. I hope that you take advantage of it. I hope you appreciate it, because it is a lot of work. That's what you're paying for, is a lot of great content, great coaching, great training, and props to all that hard work. All right. Wealth Builders HQ traders get more, period. Here. And this is what I'm referring to. I just give props to Rob all the time. Now, you didn't get much of a preview for what we're going to be talking about today, because I changed in the middle of the week. In fact, 2 days ago, I changed what I'm going to talk about because of something that happened. This is a tribute. This is going to be a tribute to one of my favorite topics, subjects, aspects of trading, and that has to do with candlestick charting. And that has everything to do with my friend, my dear friend, Greg Morse. Greg is not dead, so this is not a tribute in that context, but it is a tribute nonetheless, because he's decided to hang up his spurs after a decades-long career as a market trader, a fund manager, a renowned author with many books that he's written on trading, or several books he's written on trading. When I was introduced to Greg, I was introduced to him as the number 2 authority on Japanese candlestick charting in the Western world. Steve Nissen had gained some renown and had written some books. And what I came to learn, no offense to Steve, but that Greg was much more knowledgeable in terms of practical application of candlesticks than Steve Nissen. That's my opinion, but I stand by it. I would say that to his face. I did a lot of study, enough to absolutely believe that. So in my opinion, Greg is the number one authority, or was the number one authority on Japanese candlesticks at the time. Now, his background, Greg was actually a Top Gun pilot. He was a Navy pilot, and he wound up then flying commercial. And he just picked up this as kind of an interest, as a hobby, as he became interested in the world of investing. And he was introduced to a Japanese fellow in his travels who, in discussing with him his interests, was introduced to Japanese candlesticks. And he traveled over there and was trained, studied and trained with experts, and came back and decided to write about it. He wrote best-selling books. He wound up writing a sequel to that best-selling book of Japanese candles. And when he was asked to write a third, which would be a third edition, if you will, he said there's nothing new to say. He said I've shared with you everything. Now, Greg Morris is a truly an educator. He and I related to that. We connected on that level. He's a student. Like I said, he's very diligent, detailed kind of a guy. As a pilot, as an author, a researcher. That's just what's in his blood. He's a researcher. So I eagerly learned the skills of candlestick charting as a fledgling trading instructor. I was fascinated with his material, and I devoured the book that he had produced out. That it was the second edition. I started to discover the connections that went from the different sections I found in the book. I poured through the tables of data, because he had tables of data that were very painstakingly put together at that time. I mean, it was very difficult to do the research because the computer simulations and searching capabilities weren't nearly what they are now. So I did a lot of research that could be done now with a computer by going to the tables. Now, he had tables in his index that were about they were almost a third of the book. So in other words, he had a ton of background information that he had put in the book. And so I started looking as I studied his book, which became dog-eared, and I dropped it once or set it in the back of a car where there was some water. And so it was kind of swollen up and a little discolored, and it was marked up. Almost every page had colored marks and references. On page 92, there'd be a reference to go to page 143 and look at this connection, and then go to the index on page 175 and look at this connection and compare it back to page 33. And I just found some incredibly cool stuff. I'm being blown away at the connections that I'm seeing that are in this book. This is fantastic. So I summarized a bunch of those observations about the accuracy and frequency and the things I was learning about candlesticks. And I was so fascinated and impressed. I got on the phones and I started looking for Greg Morris's in the Dallas area, and calling him until I found him. And when I found Greg, I just started talking to him, and he listened and he answered. And I apologize for being kind of a groupie and just overstating what should have been really obvious to him, because it is in his book. But I was just so impressed with the things that I had discovered. And he listened and thought that was, those are really cool. And he says, well, when are you going to be in Dallas? And I told him. He said, well, let's meet for lunch. And so I did. I met him for lunch. I brought my dog-eared book. He picked it up. He looked at it. He laughed, and he flipped through the pages, and you could see all of the color coding and the references. And it was worn and dog-eared and swollen from being wet and dried out again. And he just laughed. He was thoroughly entertained. And he said, you know what? No one has ever gone to this much in-depth work study on anything I've ever written. He said, I'm impressed. And I said, well, man, look at all this cool stuff. And he said, Ryan, he said, stop. He said, you're telling me stuff that I don't know. He said, you're saying this is in my book? And I said, yeah. He He said, show me. And so I started flipping through the room. See, on page 145, you've got this reference, but see how it connects to 35? And that means this, I think. I mean, you tell me. And he's going, I don't know. He said, I've never seen those connections. He said, I'm fascinated. This is amazing. And I said, no, I mean, you did it. It's in your book. He said, I had no clue. Yeah, I had no clue. He said, I just put all that information in there and I made my observations, but I had no clue. I said, you're kidding me. He goes, no, you need to write a book. What? Me? He said, yeah. He said, this is good stuff. He said, this is the first new stuff that's come out in Japanese candlesticks for probably decades. I said, no way. He said, yeah, you really need to write a book. Now I'm flattered. I'm overwhelmed. I went, okay, this is cool. And so I thought, well, okay, let's do this. Well, the bottom line is I've never written a book before. I went home, I contemplated, I started making some notes, but the bottom line is about a year goes by and I'm communicating with Greg periodically and he goes, Ryan, he said, you're never going to write this book, are you? And I said, Greg, I'm trying. I've never written a book before, especially a technical book. I said, I've got all this information, but he said, well, I'll tell you what. He said, McGraw-Hill keeps contacting me. They want a third edition. The book is popular. It keeps selling, but they want something new. He says, I got nothing new. He said, you've got the only new material that I've ever seen about Japanese candlesticks, and it needs to be out there. So how about if we write it together? How about if we co-write the third edition so McGraw-Hill gets off my back and we can do this? And I said, absolutely. But I said, Greg, this has got to be the best book ever written. He said, it will be. I said, we got to do the biggest study. We got to do the biggest study that's ever been done on Japanese candlesticks, because there's a lot of stuff here that I've discovered, obviously, that is not in any other books. And he goes, I know. He said, so what do you need? Well, he had a connection with a company that helped write the software for a company called North, who was able to do scanning of stock information. You could dump in data, opening, closing, high, lows, and you could dump stock charts in there. And he had done some basic research. He had tons of research of collecting data, but he had never gone through the data. And he didn't know what it showed. So we captured thousands and thousands of trading days from the whole S&P 500. So all 500 of the S&P 500 stocks at the time. We captured thousands of data or days of data and analyzed them. And then I went through and correlated that, everything, all of the known candle patterns, and started looking at frequency and accuracy, because now we had raw data. We did not have the search capacity to do what you can do now. You could actually search this data now and do accuracy and frequency analysis. We produced the data, but I had to do the analysis. And believe me, that was painful. It took a long time. And I didn't do everything, but I did enough to come to some conclusions that I believe at the time, and I absolutely still believe, and I want to share some of that stuff with you. And what I wanted to do is share that with the world. So I did. It was a lot of fun to work with Greg. I visited him in Georgia. He had moved to Georgia in the meantime, and it was fun to meet with his wife, Laura, and ta-da, eventually we published. And it has been a bestseller, and it continues. I continue to get royalty checks every quarter because the book continues to sell. It's been many, many years. And in my opinion, there's been nothing that improves or enhances, definitely not anything that contradicts any observations that we made on that. So today, I just wanted to give tribute to Greg, and I'll tell you why. Because he's retired. He gave his last interview a couple weeks ago. I listened to it on a podcast, and I called him up. I said, Greg, are you serious? He goes, man, Ryan, he says, I'm old. I said, you're not that old. He said, I'm 76 and I am done. I am done. That's the last interview I'm ever going to do. I'm not writing anymore. I'm just going to be with my family. And I said, more power to you, Greg, but I just got to tell you, buddy, I love you. And you've taught me a lot. And, we exchanged some nice pleasantries. But I want you to know a little bit about Greg Morris, because there are some things that you could gain from knowing a little bit more about him. And in the context that I'm going to give it to you, I think you'll understand why. Greg, he graciously featured my name as a co-author on the book. As I say, it's still out there, still selling. McGraw-Hill is actually offered. I have. This is a kind of special thing. I mean, you don't get an offer by somebody like McGraw-Hill to write a book. Usually, people are begging, trying to get published, self-publishing on the internet to get started. But the book worked, and it was a great introduction. And I expect that I probably will take up on that. I just have not done it yet, but I expect that I may. I'll always appreciate it, though, for the humbleness, his willingness to look at me and say, hey, you're a student, but you're teaching me. And I'm a student at heart. I love to learn. It's exciting to learn. And when I'm with somebody and we learn together, it's a great synergy that works. And I love being around people that are students first. And Greg didn't have any ego in this. He very humbly said, hey, man, you're showing me stuff I didn't know. This is good stuff. You need to get that out there. There was no attempt to plagiarize or take it, or it was just, he's a phenomenal human being. He really is. I just love him to death. So here's the history of it. Candle Power. That was his first book. The second edition was Candlestick Charting Explained. Candlestick Charting Explained is the brown covered book that I got my hands on. And that's the one that I marked up and referenced and just, went through all of the stuff that was available to me and just researched the heck out of it. And then you can see Candlestick Charting Explained, third edition, and the punctuation there. Yeah, my name's in smaller print, but dang it, it's on there. I'm happy it's on there. But that was the history of it. Now I'm going to share some things with you that I think are important. But Greg also teamed up with John Murphy. John Murphy has been recognized for decades as one of the number one top tier technical analysts in the country, in the Western world. Prolific writer, great pontificator, if you will, on technical analysis, all things technical and technical indicators, having generated some and analyzing many more. Murphy Morris became a collaborative for many years, where Murphy and Morris collaborated. They bought the company Stock Charts and did some great things. Greg also wrote several books on two editions anyway, on the market breadth indicators, trend investing. But here's the interesting thing. Greg never traded with candlesticks. Okay. He never traded with Japanese candlesticks. He said, no, my job was to educate. I wanted to teach people about it, but he said, I never traded with them. And now you might say, well, wait a minute, how can you be an advocate of this and not ever use them? He said, well, it's easy. He said, I'm not a short-term trader. Candles are short-term indicators, which is true. Greg is a long-term trader. The long-term trend investing, market breadth indicators. And I'll tell you what, there's some fascinating stuff that Greg has done and that I really appreciate on market breadth. He particularly uses a McClellan oscillator, a variation of the McClellan oscillator, as a breadth indicator. Now, a breadth indicator, just so you know, it has to do with how wide something is, breadth is width, how widely something is being participated in. So when a market moves in an upward direction, for example, and if it moves up towards a resistance point, there will be a change in the behavior, the participation, if you will, what's called market breadth of the traders, the type of traders and the type of trading that they do. That, in Greg's mind, and I tend to believe him. I mean, I've seen it myself. I believe it. In a longer term trend, excuse me, in a longer term trend, what you worry about is a reversal if you are long term. Long term is generally bullish. People that long term trade don't engage much in active trading up and down. It's directional trading. It's up. It's the long term tendency for the market to go up. That's what they're trading. And so the breadth indicator gives an idea that, yes, you've reached up to a higher level, but, and it's an important but, maybe the market is still strong and it could go higher. The idea that the market is running out of steam in Greg's mind is most accurately predicted by breadth indicators. And as wonderful as a researcher as he was, I find a lot of correlation, a lot of accuracy, a lot of truth in analyzing the strength of a trend through breadth, market breadth indicators. And that when those change, that upward trend is going to reverse itself. Permanently? No, I don't know. You don't know, but it's going to take a breather. It's finished with the push, and the retracement could be just a 30% retracement, 10% retracement, or it could be a 50% retracement. You don't know, but what you do know from it, what you can surmise from it, is that momentum has changed. And it's not just there's a lot of other momentum indicators, but the breadth is a pretty sophisticated tool, McClellan oscillator, that in the application that Greg uses, it's very good. So, I mean, he's contributed a lot. But it's interesting that one of his major claims to fame, the Japanese candlestick analysis, he doesn't use them, never did. and when I found that out, I was a little surprised. But when he explained it, it made sense. But it doesn't take anything away from his ability to train, to educate, and to bring this knowledge that he was fascinated with to the Western world. Okay, so let's shift gears a little bit. And I'm going to take the next 15, 20 minutes going through some principles with you that I gained about Japanese candlesticks. Some of the things that I innovated, some of the things that I learned from Greg, but a lot of those things I was able to take what I learned and take them farther. In other words, and I humbly say this just because I respect the fact that Greg, who I consider the number one source, just convinced me that somehow, some way, this guy, me, was able to expand the understanding of the tools of Japanese candlesticks, understand the body of knowledge that existed, to be able to take it a little bit farther into areas that had not been understood or figured out yet. Okay, so in that context, I'm going to open this up, and I would really like to know what you want to know. And then I will tell you some of the things that I think you should know. But I'd really like to open up. And there's actually a great question here. Brenda says, how did he even know about candlesticks if he never used them? Well, it's real easy, Brenda. He was in trading. He had started to invest, coming out of his military background. He had put some money in the markets, and he found out that he was fascinated by it. And he made the acquaintance of Hiroshito, I can't pronounce his last name, who was giving there was a contingent of Japanese traders, if you will, that were giving a demonstration here in the United States. And Greg happened to be there, and he was fascinated with this thing that was being introduced for the first time. Like I say, Steve Nissen jumped in and wrote a book about it, but in my opinion, he didn't research, he didn't understand it the same way Greg did. And that's just my opinion. Okay. So Greg saw it as a fascinating way to look at the markets. And so he studied it. Now, in his study, he figured out that it was not something that he would use, because candlesticks by nature are shorter term. They're short-term indicators. They're utilized by short-term trading, and his interest was in long-term. He liked trading in general, but he thought this was fascinating, and so he studied it. And when he studied it, he started to write about it. Okay. Question: what is the difference between filled-in candlesticks and hollow candlesticks? That is a great question. Okay. The only distinction between a filled-in candlestick and a solid or a non-filled-in is that the body, okay, so a candle is a shape where you show the open and the close price as a box. And so if the difference between the open and the close price is 3 cents, then it doesn't look like a box. It just looks like a little horizontal line. But if the difference between open and close is $5, then this little vertical box would represent the difference between the open and the close. Now, Brenda, you cannot tell which direction it went during the day. You can't tell if it opened higher than it closed or opened lower than it closed unless you give it some sort of a visual distinction. And so when you fill the body in with a solid color, it doesn't matter what the color is. If you fill the body in, which is the body mean the difference between the open and the close, if it fills in, that means your assumption is that it started high and ended lower. So it started at one price and it closed lower. If the body is open, it started at a lower price and closed at a higher price. Does that answer your question? And the colors are just personal preferences. You know, if it opened at one price and closed higher, people will color that open candle, that open body, they'll color it green. But it doesn't have to be green. If it's in black and it's just a black box that's empty in the middle, it still means that it opened at one price and closed higher. Okay, so whether it's green or it's open, it would mean it closed higher. If it's filled in a solid color, that general implication is that it opened at one price and closed lower. If it's red, that means somebody's just decided to use red as an indication of down. Green is up, red is down. There's nothing magic. Green isn't up, red isn't down unless you choose to make it that way. So if people choose to say, well, we're going to use red for days that open and then close lower, days that lost value in their price, and green for the days that gained value in their price from the open to the close, well, okay, that's fine. You can do that, but you don't have to. I've seen red and blue. I've seen blue and yellow. Use any color you want. But Brenda, the first point is if the box is open, it closes higher than where it opened. If the box is solid, whatever color it is, it closed lower than where it opened. That makes sense? Trip says, thank you, Brenda. Trip says, I get so much more information from my candles since you taught me to use colors to show relationship to the previous day and open filled to show what happened that day. Excellent. Well, thank you, Trip. My endeavor was to find out what was practical, what you could actually use it with. And I got to tell you, I went from being this rabid fan to studying and learning so much and being such an advocate for Japanese candles, only to crest like a stock that hits a high and then comes down, to where I gave candlesticks less and less and less credibility the more I learned about them. Now, doesn't mean that I don't think they're valuable. What it does mean is that they are not what I imagined they would be when I started studying them. And by really getting to know Japanese candles, know their history, know their application, know their strengths and weaknesses, what I found out was they're just another tool. There's no magic. There's no magic in Japanese candles, guys. It's a different way to look at it than the way the West looks at it. That's all. Same information. There's no new information in Japanese candlesticks. There is none. It gets to be rather romantic and almost mystical the way it's described and even taught. Guys, there's no magic. If you're looking at a sunset and you put on a pair of blue tinted glasses and then you put on a pair of yellow tinted glasses, You're looking at the same sunset. You're going to see things a little differently. You'll see things a little differently, but that's all. It's just different. Same information. If you're looking at a sculpture from behind it, and you look at the sculpture from in front of it, and you look at the sculpture from on top of it, you're looking at the same information. You're just looking at it with a little different perspective. And that's all candlesticks are. They are incredibly valuable if you know how to use them and how to not get caught up in giving them credit for things that they're not, because you'll spend a lot of time chasing rainbows and running into brick walls thinking that you've got a magic tool, a magic bullet. You don't. But boy, oh boy, can they be helpful. They can be so helpful if you know how to use them. And apparently it wasn't good knowledge. It wasn't public knowledge how to use them properly, because somehow I had to figure that out. And that still blows me away. But Greg says, this is the most important stuff I've ever learned about candlesticks. And I didn't come up with it. And the Japanese didn't come up. You came up with it. I said, no way. He goes, yeah. He said, I mean, what you're saying is right. And nobody else has said it. Wow. Thank you. All right. All right. Questions. More. Hey guys, there's got to be. What questions do you have about Japanese candlesticks? I will get to telling you what I think you should know. And it's just going to be scratching the surface here. But I want to ask or answer direct questions that you might have. Japanese candlesticks. What questions? Okay, William Brown raised his hand. Bill, tell me, buddy. Do you want to ask a question? I think we could do that, can't we? Try it. Try it. Activate your microphone. It'd be awesome to hear your voice. See if it works. I have to ask my support staff if that works or not. That'd be cool. Alyssa, can you let Bill ask his question? I'm waiting. Alyssa, can you?
Hey, you see it?
Yeah, I can hear you.
Hey, I have a question. I have red and green candlesticks on my charts, but occasionally a gray candlestick will come up, appear for no apparent reason. I don't know why it changes color.
Interesting. What software are you using? What charting?
I was on Street Smart Edge with the Schwab.
Okay, I can't answer that question, but I do know this, that you can program any reference or any rendering that you want. And so what they've got that rendered is it's meaning something. I'm not sure what that is. I can tell you in the past I've seen a third color, but it can be anything, Bill. And
I mean,
quite frankly, if it's a body, is it a body like, you know, a open or a closed body? It's just gray.
It's a filled in gray color.
Yeah, that would be a good question to ask them why they're doing that, because they're trying to illustrate something, but I wouldn't know what that is.
Yeah, I don't know. Right now, I'm having problems with the chat box. I typed in my question in there, but there's no place to send it. I can't. There's no place to send to the chat or to your back.
Well, I tell you what, I am so happy that you raised your hand and that we were able to overcome that. I don't know what the problem is on my end. It looks like it's operating normal, but and you guys, I would recommend you follow Bill's example. If you have a question, you can type it in, or if you want to ask me, I love the interaction. I absolutely love it. Any other questions, Bill, specifically about candlesticks, type of patterns, what they do? There's got to be.
I mean, I'm a beginner trader. I'm not that familiar, sure, but I understand the support and resistance levels. What really snows me is the Fibonacci's. It just over my head. I can't. I don't know what they're talking about.
Well, we're not talking about fibs today, and I'm gonna highly recommend you to follow Rob's explanation. He's the expert on the fibs. But Japanese candlesticks and Fibonacci's are not in the same family. Okay.
Okay.
Fibonacci's have to do with helping to establish support and resistance. Japanese candlesticks, guys, essentially, what you're seeing on the screen, Japanese candlesticks are reversal signals or continuing signals, Bill.
Yes.
So they are going to tell you, they're going to indicate that a stock is getting ready to reverse its direction or that it's going to continue. The interesting thing about it is there is more than double the amount of reversal signals than there are continuing signals. So candlesticks are highly, highly leveraged in terms of their signaling towards reversals as opposed to continuing. Why is that? Well, because what we're looking at in trading, typically, the more important thing that people want to know is if something is about to reverse rather than continue. If you own something and it continues to go up, you're happy. You don't really care what any signals are. It just keeps going up and making money. What you don't want is this thing to reverse while you're in it. And either you get hurt because you're holding something that is losing value, or you're being hurt because you're not in something that's gaining value and you wish you were. You got left out. Either way, it's painful when something reverses. So candlestick charting, the signals that have been observed have to do with a high bias to reversal signals. Okay, more than double. Now, how do we use them? Well, that's another question. Brenda says they're used differently. They are used differently because there's different signals, but they really, Brenda, boil down to two things: either reversal signals or continuation signals. One of the biggest questions that I had that I wanted to know was how accurate are candlesticks, the signals? When I started reading the books, first by Steve Nissen and then Greg Morris, when I started reading these books, I was fascinated because of the description. This is a reversal signal. This is and there's all these names, the Japanese names for reversing signals. And you'd read about it and you go, oh my gosh, this is so cool. Let's see, I'm looking at two crows. This is the name of a pattern. This is a two crows pattern. And that is after you've had you're moving to the upside, you throw a strong bullish day. So you've got a strong open candle, and then it gaps up and it throws kind of a small black candle or a filled in candle, one that goes down. And then the next day it jumps up a little bit and then it drops even farther and it fills the gap. That's called the two crows pattern, and it's a reversal pattern. Oh my gosh, I wrote that down. I memorized it, and I'm good. Boy, the next time I see two crows, that's a reversal pattern. Okay. Great. What does that mean? And that's a great question. What does it mean? How accurate is it? Well, I don't know. The book says that it's a reversal pattern, so I'm looking for it. Yeah, but the question becomes, does it work? Well, it's in the book. Yeah, so, well, I don't know. It's in the book. Okay, so if it happened 9 times, how many times out of 9, or 10 times, how many times out of 10 would it actually follow through and reverse? I don't know. Well, don't you think you should? See, I'm talking to myself. I guess. So is it any good? Well, I thought it was. It's in the book. I read it. But honestly, I don't know. How do you know? Well, okay, so let's go to another one. Let's go to the morning star or the evening star pattern. Ooh, I heard about that. Yeah. Okay, so what's a morning star? Well, a morning star and an evening star are patterns that signal reversal. Oh, okay. So if I'm going down and the stock is going down, and then it gaps with a small body. And Bill, I'm going to go back to your question about the candle being gray.
Yeah.
And the reason I don't know what they mean is because I don't know what they mean. But in the books, a lot of times, if you're talking about Japanese candlesticks, if it's gray, it is a body that it means it doesn't matter if it's open or closed. So in other words, we fill it in as a closed candle because it goes down. We leave the body open in an open candle because it went up that day. Well, what if it didn't matter? What if it didn't matter what color it was for the pattern? If the pattern says it doesn't matter if it goes up or down, when it throws this candle in this position, it doesn't matter. Well, then we pick a different color, and that's where we would put a gray or a yellow or something else.
So what
in
you're,
this case,
can you hear me?
yeah,
So what you mean is like when I see a gray candle, then it has a upper portion and a lower portion, which means it either open or closed, and maybe it finished in the middle and it's a gray.
no, because when you have a box, the box of the candle, the top of the box is where it closed. The bottom of the box is where it opened, if it's open. So in other words, if it opened at one price and closes higher, the box will show always the open and close. If it's open, it closed higher. If it's filled in, it closed lower. So all it does when you look at a box, where do I put my open? At the bottom or the top? And the answer is you don't know. Is the candle filled in or is it open? If it's filled in, then you start at the top with your opening price, you finish at the bottom with your closing price. If the candle is open, you start at the bottom with your opening price and you finish at the top with your closing price. Now, what if the candle pattern, Bill, says it doesn't matter which way it went? What matters is how big it is. In other words, with the morning star, if you're moving down and then you gap down and you have a small body. Well, what does small mean? It means small by comparison to what's normal for that stock. So, one stock, a small body might be $10 because the stock is hugely volatile. In another stock, a small body might be 25 cents. So it doesn't matter what it is, it's small by comparison. In the morning star pattern and in the evening star pattern, which are reversal patterns, it doesn't matter what color it is because it doesn't matter if it went up or down. What counts is it was small. So if the stock gaps down and it doesn't go very far, then it opens the next day and goes the opposite direction. That's a morning star or an evening star. So, Bill, what I'm saying is there is a reason for it to be gray in my world, in my book, because I'm showing you the Japanese candle pattern. But in the company software that you're looking at, if the body is small, I would lean on this idea that they're saying then it doesn't matter. But I doubt that that's what they're doing. I would ask and find out, especially if if it's a big body and it's gray, I have no idea what they're trying to say. Okay. So in the case of the morning star, which is an evening star, these are reversal patterns, morning star to the upside, evening star to the downside. In both cases, you gap up to a small body. And the Japanese say, it doesn't matter if it was open or closed, doesn't matter if it went up or down, it matters that it jumped up as a gap and it was small. It didn't go very far. It was just a little bit. It didn't go too high, didn't go too low, and the body between open and close was very small. Okay, so in this case, that's why gray would be used, because it's saying the size counts here, not the color, just the size. All right. So now the question is, well, how accurate is it? Well, what Greg and I did in the book, and I'll just read this to you, for the morning star. Okay. The morning star, is it considered a reversal pattern? Yes. Is it considered a good one? Oh my gosh. I read about it. People were talking about, oh, when you see a morning star, look out, you're going to have a reversal. When you see an evening star, look out, you're going to reverse to the downside. Okay. So here's the data. After using 7,275 stocks for 14.6 million days of data. That's what we analyzed. That's what I insisted on, Greg. We analyzed 14.6 million days. Here's what we found. 45% of the time, a morning star accurately predicted a reversal the next day. Over 2 days, 45%. It was still 45% accurate over 2 days. 3 days later, did it predict? With 47%. 4 days later, was it accurate at predicting a reversal? 46%. 5 days later, 6 days later, 7 days later, 47%, 48%. So what does that tell you? That says in looking at all the morning star patterns we could find, in 14.6 million days, 45 to 47% of the time, it accurately predicted a reversal. I was blown away. Are you kidding me? This is one of the patterns that I was told was that this is a morning star. Oh, those are great reversal patterns. Really? How accurate is it? I actually have data. You want to see it? Sure. Okay. 45 to 47%. What? See, that's what I was thinking. What? Are you kidding me? What about the evening star? Is it better? Well, evening star, 44. So I'm going to read days 1 through 7. 44%, 45, 46, 46, 46, 45, 48. No, 46. So slightly less, but basically about the same. So that means a little less than half the time that you see a morning star and an evening star, it's going to reverse if you look at it on the aggregate. I'm going, wait a minute. Wait a minute. I'm reading about this in the book, says this is a good. And so I adopted this little way of teaching. And when I would say, tell me a good candle pattern, one that you really think is a good pattern, people would say whatever they liked. And they might say morning star. And I'd say, great. How good is it? And they choke immediately. Well, really good. Oh, that's great. What does that mean? Well, it's really good. How good is it? Really good? I said, if 10 of them happen, how many times out of 10 would it be accurate? And they just sitting there kind of with their jaw dropped, and they don't have an answer because nobody knew. So for roughly a little over 100 candle patterns in the book that I did with Greg, we took the top 100 patterns, and there's a little over 100. And I had them all memorized. Right now I don't, because I don't even try. And I'll tell you, I can explain why. The best ones we could find, the absolute best ones we could find, were about 75 to 78% accurate. So that's close to 8 out of 10 times they're accurate. As soon as I would mention that, people would say, which ones are they? Which ones are they? I get it. I would want to know that too, right? But when you have enough data and you can parse that data and come up with stuff, it's pretty fascinating. So what's important? Accuracy? Yes. I want to know how accurate they are. Okay. What else is important? How about frequency? What do you mean? What if you had a pattern that was 80% accurate? Were you interested? Oh, yeah. I want to know 80%. That's great. That's great. Well, okay, I can tell you, but it happens so infrequently. You might see it 1 in every 5,000 days of trading. What? Yeah, not only can I tell you how accurate it is, I can tell you how often it shows up. And guys, why would you spend your time searching for something that sounds good? 80%, wow, that's amazing. 8 out of 10 times. Well, that means 2 out of 10 times it's still not going to work. But okay, 80% is good. That's good. But you're going to see it so infrequently that you probably will never see one. Oh, you see, it's worthless. It depends. It depends. Now, let me tell you a little bit more about why it depends. History, guys. History is more important than anything else. It's that way with every indicator there is out there. It's that way with every pattern there is. What if, and this is very possible, what if you found a candlestick pattern that was 80% accurate on a particular stock? But if you use you look for that same candlestick pattern on a different stock, it was only 50% accurate. Is that possible? And the answer is absolutely. I proved it. It's very possible that you could have a candlestick pattern that works extremely well on one stock at accurately predicting reversals and not work worth a darn on another stock. How is that possible? Easy. You have different people trading the stock. The stock may be in a totally different industry. It's affected by weather. It's affected by shopping cycles. It's affected by whatever. But 2 different stocks can respond completely differently to candlestick patterns. Can you see how silly it was to get caught up in the books that said, oh, this is a great pattern, and everybody's chasing off looking at this pattern, trying to trade this pattern because somebody said it was good? Guys, this is fascinating stuff, and it can be extremely valuable if you use it in context. History is your most important tool. Your ability to see patterns. What is a pattern? A pattern is history. Something left a mark. Something left a historical record that you can look at. They scratched their self in the dust and left a trail. They left footprints. From that history, you can decide how well something has performed in the past, and you can decide how much weight you would put on that signal going forward, can't you? Guys, there's no universal signals. Everything has to be put in context of how it works on that stock. Does that mean that you're going to find a book on it? No, you're not. You're going to find software on it? Well, you might find some that'll try, but you're still going to have to do some work. If you want to know if a certain Japanese candle pattern works on a stock, I'm going to show you how you can figure that out. I will. I'll show you how to figure it out. And I'm keeping this a bit high level because I decided when I did this tribute that it's time to revisit some candles. And I'll tell you what, next time we meet, I am going to do some in-depth work, and I'll show you candles, and we will give you some excellent instruction on how to use Japanese candles. Right now, I'm just giving you a bit of a high level. Okay. Yeah, Brenda, I get that. That's good. I saw your comment. I didn't respond to it yet. Sorry about that. And let's see. I want to go back to where it was. There we go. So let me just look here. Charles, it's not a question, but I've learned from you was to keep it simple. Where it opened, where it closed, the body, the wick, the size, and where it is from the previous candle. Yes, and I'm going to expand on that, Charles, because there's a couple things I want you to take away from today that will enhance that even more. Okay, I'm going to read something from Tripp, and it is so fun, guys. When you read your own words coming back, it's kind of like when you hear your kids saying things that you recognize that you said. That can be very embarrassing, and it can also sometimes make you proud, you know. So Tripp's making me proud. He said maybe we should develop a dossier for the stocks that we trade and what chart or candle patterns work well for each stock. Ha 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 ha. Okay. I'm so proud of my kids. and Tripp is one of my trading kids. Brilliant. So what Tripp is saying is, what if there's a stock that you like? Might it not be a good idea to start studying that stock so that you can trade it better? In other words, study, how does this thing behave every time it reverses? Is there any correlation? Does it have any nuances that it repeats? You can see all these things in the candlesticks. You could figure out what candlestick patterns work for that stock on reversals and don't work for that stock. Why waste your time on things that don't work? Yeah, but it's 80% accurate. Maybe somewhere, but not on this stock. Oh, but that's my favorite candle pattern. Throw it in the garbage on this stock. It doesn't work. Wow, really? Yes. What ones do work? Find out. Go look back on the last 12 reversal patterns. Look at the candlesticks. See if you can find any correlation. Is there any patterns there that tend to repeat themselves? Oh, yeah. Okay, now you got something. What's the name of the candle pattern? Who the heck cares? You mean, no, you don't need to know. Well, what's it called? I don't even know. Can you see it? Yeah, I can see it right there. When it looks like this and this, every time it does this, or 8 out of 10 times. Great, you can trade it. Yeah, but what's it called? Who cares? Right? You develop a dossier. This is what Tripp's saying. I develop a written dossier on how to trade this particular stock. When I get to a head and shoulder pattern, when I get to a pancake or a frying pan bottom, when I get to a reversal point on an uptrend, it tends to do this. And so when I see it, I can lean into it. Why? Because there's a history that gives me confidence that there's a high probability. Guarantee? No, not a guarantee, but there's a high probability because it tends to do this. What book can I read? There is no book. You're the book. You wrote the book. You wrote the dossier on how to trade this stock because you were humble enough and smart enough to recognize there's nothing new here. It's just a different perspective. It's a different way to look at it and find the pattern. Could the pattern be just the line? Sure, that's a pattern. Could it be certain other indicators? Sure, if you can find the pattern. And the more patterns that agree with that, the more tools that agree on that pattern, rather, the better the signal is. Japanese candles is just one of the signals. Is it the only one you should use? Heavens, no. But it can be a good one if the pattern's there. Now, one of the things that I teach my students is if there's no pattern, there's no trade. If you can't find the pattern, don't trade it because there's nothing there. You're just throwing stuff up in the air hoping it works. Yeah, but it threw a doji pattern. Who the heck cares? Show me the reason that a doji counts. Well, it's in the book. So what? And the accuracy is, so what? What is it on that stock? How accurate is it on that stock? Well, I don't know, the book. Forget the book. I wrote the book. Forget the book. Read the book so you understand this is probably a pretty good one. Now, does it work on this stock? I don't know. Let's find out. That's where you come in. That's where you will do the work. More questions. Charles, the way you looked at Greg Morris as an educator coach is the way I've seen you through the years. The passion in teaching is a gift. Not everyone has that. You couldn't have said a nicer thing to me, Charles, and I appreciate having known you for many years. I appreciate you recognizing that because it's like somebody recognizing that, hey, the student got what I was trying to actually tell him. There's not much greater sense of joy to a parent than to see that your kids accepted some of the wisdom you were trying to tell them, or that any student accepted that, hey, you know, that's good stuff. Thanks for sharing that with me. So I'm almost choked up, Charles, that you couldn't have said a nicer thing. Thank you. And same thing with Tripp, talking about the dossier. That's brilliant. Okay. Let's introduce a different principle here real quick. How something is formed can be much more important than what it's supposed to say. Okay. Now I'm just going to tease you in the last 2 or 3 minutes because that's all we have. But I want to pick up on and carry this on next time. Okay. Again, patterns rule. If there's no pattern, there's no trade. What the book says is just a starting point. If there's not proof of relevance, it's just an opinion. Greg pointed out that he had mistakes in his very first book, that he had all the books on his shelf that anybody had written about candlesticks, and they were marked. It was funny. He'd pull them down, he'd flip, and there'd be a tab there. He'd open the tab, and it's all highlighted in yellow. And he said, that's a mistake I made in my book. And all they did was copy my book. They copied the mistakes. They didn't know what they were talking about. They just copied stuff so that somebody else could write a book. And he had, I won't mention the names, but he had all of the authors, anybody that had written about candlesticks, and every one of them had mistakes out of his first book. It was hilarious, but it's true. Guys, you don't have to be a wizard to be able to use candlesticks. You just have to have it explained to you. The biggest point in trading is the turn, earn on the turn. You've heard that before. Okay. You can see candles. They can help you a lot if you do a little bit of the work. You can see what the candles can do for you, but you got to look for it. Okay, so let me just show you something very quickly. Most good charting software now will do so many things, unbelievable things that they couldn't do years ago when I was getting started in this. But in general, you're going to look for reversal signals. You're going to look for them at historical reversing points, and you're going to look for patterns. I'm going to give you 2 visuals to explain this. Okay, first of all, now, Bill, this goes back to the very first question. I know you're new on this, but you'll look at this, and the first one, that little candle up there, it's in green. Okay, it doesn't have to be. It could be in black, but you can see the body. The difference between the open and the close is open, right? It's hollow, but it's in green. Opened at the bottom, closed at the top of those 2 blue lines. Now, this at long tail, the tail is the line sticking out of the top, and the bottom shows the high and the low for the day. This is considered a reversal type of a signal. Okay, it's in the category. It's a reversal signal. Okay, so is it any good? Well, in my mind, it depends on a couple things. Number one, how it was formed. Number two, where it was formed. So let me show you the relevance on that, how it was formed. Look at the first example. You can see the two little dots show the open and the close. Yes? Okay, there's the open and the close. The line goes to the bottom and to the top to show you the high and the low of the day. Okay, in this case, it opened, went down, rallied back up during the day, and then pulled back down and closed. Okay, it's supposed to be a reversal signal. But if you look how it was formed, that's pretty straightforward. Went down first, went up second, and then closed higher. What if it went down first, rallied up, and then came back and spent more than half the day bouncing around in the middle? You see, now where it closed doesn't really matter. There was a push to the upside, a push to the downside, and in the end of the day, they just kind of sat there treading water. What is that signal? And the answer is, I don't know. I don't know. I really don't. Now, if the stock had been moving up very strong for 6 days in a row and then it did this, I would say, uh-oh, your upward momentum just came to a dead stop. The traders could not get any momentum to go up or down. You tried to go down, they rallied back up. Tried to go up, no, not going to do that. Then they sat around twiddling their thumbs, going dum 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 all day long. Well, that tells me something if I know the context. I had 5 strong days in a row. Oh, what if it was at a resistance point? Oh, it's failed here before. Oh, see, now the picture starts to come together. How it's formed. Look at the third one. It drops down. It spends more than half of the day at the low of the day. Then suddenly at the end of the day, it rallies up and then sells off. Well, I can tell you exactly what that can look like in the day. Some news came out 3/4 of the way through the day. It was bullish. It shot up there. There was some profit taking. And then as you approach the end of the day, because of that big spike, people are a little nervous. I'm not sure if this is for real or not. I'm cashing the check. And so at the end, they sell off, but they still close higher. You see, each one of those tells a story. How it's formed can be more important than what the heck it's supposed to say. Same thing with the bottom one. Okay, a lot larger body, bigger body, but how it was formed can tell you a lot about what it might mean. Now, here's the next important thing. Where was it formed? Look at all the red reversal signals. Every red dot is a reversal signal. I want you to look and do the math real quick in your head. There's 8 of them. How accurate are those red reversal signals? Roughly, what's the percentage? Somebody throw something out. How quick can you do a little bit of math? What? How accurate is it? Anybody? You've got 8 signals where it threw a certain candle pattern and says, oh, this is a reversal signal. How many times did it actually work? I see 1, 2, 3, 4. Oh, 4. So 4 out of 8, it worked. How many times didn't it work? 1, 2, 3, 4. Okay. So while it looks good, it shows up at key points. Accuracy is 50%. Okay. But if you look at it in context of where it happened, when it happened at a resistance point, how accurate was it? Well, first of all, we have a head and shoulder pattern. So did it work with head and shoulder pattern? Absolutely. The next time it worked, it was at the same point that the head and shoulder pattern failed. Oh, well, that makes sense. The next time it worked was on a double top, right side lower, trying to hold on to that previous high, and then it broke through. It worked there too. You see, it tends to work if you're at a resistance point. What a concept. And it tends not to work if you're not at a resistance point. Wow. Yeah, see, that was a wow. Guys, I tell you what, it dumbfounded me that nobody had ever written about this freaking thing. Nobody. Nobody had ever made the correlation of, does it matter where the candlestick shows up? Really? Yeah, nobody had done that. Why not? Why did people copy Greg Morris's mistakes? What about the reversal, the green patterns? These are green reversal, upside reversals. 1, 2, 3, 4 of them. There's only 4. Oh, there's 5. There's 5 of them. How often do they work? How often? You got 5, 1, 2, 3, 4, 5 patterns. How many times do they work, the reversal patterns, on this particular stock? Come on, you can count. It's real easy. Do it. Do it. Do it. Do it. Do it. How fast? 5 times. 5 out of 5. This thing is 100% accurate on every stock. I have no idea. Probably not. But on this stock, every time it's at a support resistance level where it could reverse to the upside, it worked. Well, then now I know I can lean on this one. Is it perfect? Well, so far, will it continue to be perfect? I don't know, but I'm going to lean on it until it shows me it's not. But boy, oh boy, 5 out of 5, and they're all at the right spot. Wow, that means something. You see, guys, the art of learning to use any tool is learning how to use it, where to use it, when not to use it, when not ask it to do something it's not designed to do. Not to just take it at face value that, oh, this is a good tool, I'm going to use it. Yeah, that's a screwdriver. You need a shovel. Yeah, but it still digs. Yeah, but you see? All right, guys, we went over slightly. Sorry about that. I'm passionate about it. And next time we'll continue with this kind of practical stuff. And if you're interested, I think that's what I want to do. That's interesting. Germans stole the plans for our torpedoes during World War II. Our torpedoes didn't work. Their copies of the torpedoes didn't work either. I should share that with Greg. All right. Well, we will talk more about this next time, guys. God bless. Have yourself a wonderful day. Love hanging with you. Take care. God bless.